Stocks worldwide are tumbling as investors worry that the U.S. is headed into recession. A weaker than expected U.S. jobs report caused the panic. That seems odd. At the time of the taping, the Dow was down 4.3% in the last 5 days. The S&P down 4.8%, and NASDAQ down 6.5%. Outside of the U.S., big plunge. The Nikkei in Japan dropped 12.4% overnight, its biggest fall since 1987. That's a long time. In Europe, the Stoxx 600 index is down 2.5%. That's not so bad. So what was happening here, Scott? You were just saying, there was uncertainty with tech earnings because they're a little disappointing, although they've been going like gangbusters. I guess they stopped gangbustering. We can, just so people are aware, at the time of the taping, Amazon stock is down 13% in the last 5 days after missing expectations on revenues and sales. Also to blame, Amazon says it plans to continue spending big in AI at the expense of short-term profits. This is everybody. Apple beat expectations for net sales and income, but revenue in the China region declined. China is seeing a real problem with consumer spending as the company faces local competition and bans on governmental use also. Intel had the worst trading day in 40 years, announcing it would be cutting 15% of its workforce and suspending dividend payments as part of a restructuring plan. That guy who's running it, Gensler, is having a real, I think that's his name, is having a real issue catching up in AI. Tech stocks have overall seen their steepest 3-week slump in 2 years. But they were getting a lot of profit taken in that regard. I don't know. Scott, big thoughts?
Again, I think this is a little bit, CNBC or whoever it is, or the Dow, or name your digital media company, wants to get as many clicks as possible. As we stand here, the Dow is down. It's down 1.9%, and it's plummeted to levels not seen since July. I mean, it's not that big a deal.
Scott says, calm down, but go ahead.
Well, it's just true. It's had a historic run. I think this is a bigger deal in Asia. They're worried about. What's interesting, Pankaj Jemawat, again, another one of my colleagues at NYU, always talks about trade is much more regional than people think. Our biggest trading partner is Mexico. I think our third after China is Canada. Basically, countries almost always have their biggest trading partners based on proximity. And when China is when the second largest economy is going into a slowdown, it's just going to impact the entire region. If you look at the data, unemployment has ticked up. The new jobs report was disappointing. So the market seems to believe that we may be going into recession. The other thing, quite frankly, is just stocks we're expecting a rate cut. And there's a fear that the rate cut has not come soon enough. And the expectation of a rate cut had been built into stocks. But if you look at what's really gone on here, it's just not. It's more spectacle than significant. When you drill down on some individual stocks, what I think you find is just some incredibly interesting stories. So, for example, Intel. I mean, just to give you one stat, Intel is now worth, let me put this another way. NVIDIA is worth 20 times what Intel is worth right now. Intel in the last 5 years has lost half its market cap. I mean, this is a company, when I was graduating from business school in 1992, the two premier jobs that everyone wanted to go get companies were Intel and Dell, which kind of marks the age. And Apple was a shitty company that might not come back. It had kind of lost the script, and everyone said it was underpowered and overpriced. But everyone wanted to go to the best company in terms of reputation for growing management, and had just kept killing it in terms of a stock price, was Intel.
Yep, remember?
And another thing, these CEOs need to stop tweeting. The CEO, Pat Gelsinger, posted a quote from the Bible on Twitter, open quote, "Let your eyes look straight ahead, fix your gaze directly before you, give careful thought to the paths for your feet, and be steadfast in all your ways." Proverbs 4:25-26. Here's another proverb, Pat. What the fuck are you going to do to save shareholder value here? Said the Jesus of all markets, inquiring to CEOs who are doing stupid shit like putting proverbs out on. Anyways.
I would agree. I was just thinking this. Jamie Dimon did another. I was like, sit down, Jamie Dimon. Just run your bank. Stop pontificating at us in your arrogant fashion. But anyway, go ahead. Sorry.
Well, there's a difference between.
No, seriously. His opinion was called "The Next President Must Restore Our Faith in America." We got plenty of faith, Jamie. Jesus. Sorry.
Must restore our faith in America.
That's the thing. The first line is, we live in a perilous time. But go ahead.
Wouldn't that be nice?
Yeah.
Okay, fair. That's hard to disagree with. But There's a huge, I think, opportunity for tech CEOs, not even tech CEOs, CEOs to have very well orchestrated, working with IR, working with good production people to put out earnings releases or statements about their earnings out on YouTube. I think it's powerful. I think it's a means of meeting retail investors, and it signals innovation. But I'm almost at the point now where CEOs, part of being a CEO is a few of the following things. One, you don't talk about religion or politics. You just give that up because you're just going to alienate 50% of whoever, right? And we're not really interested in knowing about your views on Christianity or the president or whatever it might be. Two, you are not allowed to ever have sex with anyone at this organization. Doesn't matter if you fall in love, doesn't matter if you're divorced, doesn't matter if you've known each other. When you're the CEO on a risk-adjusted basis, it means you make tens of millions of dollars, which makes you sexy anywhere in the world. Take it off campus. And then three, I would have no social media from you. It's just not worth it. It's just not on a risk-adjusted basis. Sure, some people are good at it. Tory Burch was really good at it. Some CEOs are you could argue Elon Musk has built a huge following on Twitter. But the world does not need to know what the CEO of Intel is thinking at that moment. It's just not a good idea.
Right. Yeah. Well, I agree with you. I literally am so tired of reading like all of them, like stop talking, and actually those that are causing danger, like Elon's been tweeting about these riots that are happening in Britain of this sad killing full of misinformation has caused all kinds of right wingers to come out and attack Muslims. And he was encouraging it. It was, just sit shown and do your jobs. That's my. So you feel okay about this global sell-off? Everyone's all like, the Fed's going to do an emergency cut? That's what they think.
See, I hate that because, I mean, a couple things.
Looks panicky, right? Doesn't it?
Okay, but my generation has convinced Louis and Alex's generation and the generation of people who mostly work with me. The average age of Prof G, or I would say the median is 26. The average is probably 32 because me and Catherine, who run the company, are both really fucking old. But the median, the number of almost 12 of our 14 employees are under the age of 30. And what my generation has managed to do is convince them of a myth, and that is that market highs and strong markets are a good thing, and that it's worth mortgaging their future in the form of debt and artificially suppressed interest rates to keep the markets high. And they're not. The markets touching all-time highs are good for Swisher and Scott Galloway, who already own real estate and already own stocks, because there's two phases in your life. There's the investment phase where hopefully you've established professional currency, you are spending less than you're making, and you are investing that money. There's the harvesting phase. To a certain extent, you and I are still making good money, but we're kind of harvesting. We're slowing down. We have nice lifestyles. We want to give money away. We want to take care of our kids. We want to do nice things, right? We want to start spending money. You want the harvesters, my generation, wants markets at all-time highs. But what the youth don't recognize, or that we've tried to evangelize as total fucking myth, is that they should have market highs. No, when you're investing, you want the markets to crash. The reason I am wealthy, I'm talented, I've started companies, but the reason I'm really, really wealthy is that in 2008, we let the markets crash, and you could buy Apple, Netflix, and Amazon for about $8 to $12 a share. Netflix closed at $640 a share. So what will my generation do? My generation will panic. If there's anything resembling a notion that my generation gets to be less wealthy and see my stocks and real estate go down, so we will mortgage their fucking future by issuing more debt and creating stimulus and pretending that it's good for everybody. You should let the markets fall such that young people can take advantage of what is a natural part in a capitalist cycle, churn, disruption, so they can have their shot at buying real estate, at buying stocks at a reasonable price. But instead, you're already hearing
the newspapers are freaking out.
You're already hearing this bullshit narrative of, we've got the government needs to intervene with stimulus or bring down interest rates. No, we need to let the markets do their job. And the next generation of people needs to appreciate how wonderful capitalism is.
And the other thing for people to realize, it's always said at all the times whenever there's a crash, it's a good reason to sit tight, right? Like sit tight. So you don't need the money. You don't need a yacht.
That's right. Don't panic here. The market has already recovered most of its gains here. But what I hate is the notion that if you're a 30-year-old producer of a podcast and you're finally making some good money and you can invest 20 grand a year in a stock, you want the markets to crash because you're investing. You're in the investing part of your life. And this bullshit that we need to pull out our kids' and grandkids' credit card to keep us wealthy, it's a virus that infects our society. We need churn. We need disruption. Anyways, thank you for my TED Talk.
Yeah. It's true. I agree. I like your take. All right, that's a take. We'll see where it goes. If everyone loses all their money, they're going to call you, Scott. Anyway, we'll see what happens.